Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So I have been planning to do this video for the last 2 weeks, and one of the reasons is because after I've done the portfolio update, there were questions that I've received from the community that asked me, some of the stocks that are doing well, some of them are not doing so well. And I just want to do a quick video just to kind of summarize quite a few things. Okay. So first, I'm going to share with you guys companies that are doing really well. So 5 top companies, the 5 that are not doing so well, all of that in this video. And then I'm going to talk about the portfolio generally, because I don't think I actually went and explained the reasons behind why this whole portfolio exists and what I'm trying to achieve, inshallah, in the long run. Because I have been getting quite a few private messages and emails just asking me more about the portfolio breakdown on what it is it growth companies, is it value investing, is it what is it that I'm trying to achieve, or dividends, whatever the case might be. So I'm just going to explain those things. I'm going to explain the ISA account side of things. I'm going to explain the brokerage account that I'm using or why I'm using this and so on. So there's a lot to go through today's video, so I'm just gonna start. And of course, if you can do me a favor and like the video, that makes a huge difference. It helps genuinely the algorithm. And of course, if you have if you want to join the community and learn more about other brothers and sisters and from myself as well included, then join us in the Patreon account. Patreon account will give you access to a Discord full of brothers and sisters who are sharing good practices on daily basis. You get access to the family portfolio, you get access to the actual portfolio, you can download a PDF version of this, you get the monthly undervalued stocks, you get the Sharia compliant investing ebook, you've got the dividend trackers, which I'm updating right now. Then you've got the stock watch list for the US, which I've updated recently. I'm doing currently the UK version. And then you've got, if you have ETFs, of course, then you've got the ETF trackers that you can use. Okay. If you think these are, like, some of the spreadsheets are a bit more difficult to use and you're just looking for something kind of buy and forget kind of thing, then I've started using Snowball Analytics. Snowball Analytics is this platform that allows me to do what I was basically trying to do here manually, all the dividend trackers and so on. So you can see your entire portfolio, you can see how much you're up, how much you've done. You can look at basically your entire portfolio generally, like with the breakdown of the entire portfolio. You can basically filter it by dividends, so the highest dividends that you're receiving and so on. You can basically look at the analytics side of things and look at each individual company. There's a lot to unpack, and inshallah I will be sharing more with you guys about this in the coming months and so on. As you can see, is a nicely laid out. You can look at the growth side of things. So there are loads of things that you can actually do with this. So what I'm going to do, inshallah, is share with you guys in the next few months, like how to use the software. But there is a link on the description that if you're interested, you can have a look at that. But one thing I really like about this is just every time I just make a buy or sell here, straight away I go here and add that and then leave it alone, and just basically it does what it's meant to do. So yeah, if you're looking for just automatic thing, then probably this will be better than actually using the trackers. Right, that out of the way now, let's talk about the portfolio. So what you see right now started in 20. So when COVID happened, as soon as COVID happened, that's the time where we all had a little bit more time. We all had a little bit more money to spend because we were no longer doing things that we usually used to do, right? And that's when I actually got with a couple of, me and a couple of brothers were talking about investing and so on. And to be honest with you, the brothers I was talking to were not either practicing Muslim or basically non-Muslims, but we talked about a lot about investing. And I had no idea where to start. And I genuinely, this was basically 2020, but 2018, 2019, I've read a lot about investing, but I've had no idea where to start. So 2020 is when I thought I need to take an action. I've learned all of these things. I've read Warren Buffett's books. I've read other books. But one book that I read of the basic December of 2019, basically was a book called Expat Millionaire. And that book genuinely changed my life. And I'm going to talk about that video. I've got a video coming up about that book and what is happening basically with that situation. I'll explain that. But what they mentioned was, in that book, they talked about Sharia compliant investing. and then they talked about a couple of ETFs, including the iShares and so on. And I just needed somewhere to start with. The Wahid was there at the time, but Wahid was not, of course, the best place to start with for me anyway at the time, because I just didn't like the Wahid structure of the basically the fact I was paying for quite a lot of money for ETFs that already existed and I could just buy them. But at the time I didn't know this, okay? And one of the things that I read in that book was stay away from basically paying for high prices for basically investment, so like ETFs, index funds, and basically talked about the expense ratio and of course the management fees and all of these things. Anyway, long story short, that's when I thought I need to do something about this. So I did a lot of research. Alhamdulillah, I understood quite a lot about the Sharia compliant investing. I'm one of those people, once I want to learn something, I get obsessed with it. And I genuinely, for about a good 3 months, I did nothing other than just read about everything that I can find, watch every single video, basically talk to ulama that I knew, like everything. I did everything I could to make sure I understood what I was doing before I got into it. And eventually, alhamdulillah, I've managed it. I started looking at brokerage, and the first one that I found was a company called Halal and Lansdowne, and they're the biggest in the UK. So I started with that, and then I realized it was too expensive because I was paying about £11 or whatever it was. It changed that to Trading 212. Trading 212 is what you see right now in front of you. This one thing I love about this brokerage is the fact that there's no commission, and it's basically financially regulated, so and so. So alhamdulillah, I'm so happy that I found this. And if you, by the way, if you live in the UK or European countries, you can get access to it. Just use the link of the description. You get a free stock every time you sign up for this. So yeah, from there onwards, I started investing and I started basically buying heavily. I had a bit of money at the time, like I saved quite a bit, and I started buying basically regularly. While I start learning. I did a couple of stocks that I knew. So I started with what I knew already: the Procter & Gamble's, the Unilevers, the J&J's, the Microsofts of this world, Apple. I basically looked around me and said, okay, I do own an iPhone, I'm going to buy their shares. I use Head and Shoulders. Let me buy Procter & Gamble shares. Dove, whatever, my wife uses this. So basically that's how I started. So alhamdulillah, that's basically I made it simple. I didn't want to overcomplicate it. I didn't buy any high-flying technology companies. I didn't lose a lot of money. The only money that I lost was actually stable kind of companies like 3M or whatever. Because I sold 3M while I was down about £1,000 or whatever it was. So yeah, from there onwards, everything was going to the moon. People were buying all sorts of madness. But I stayed on the course and I tried to do the best that I could to make sure that I learned and stayed disciplined. And up until now, alhamdulillah, I've not lost a crazy amount of money. And as you can see, this is my portfolio right now. After basically 4 years, or almost now 5 years, 4 and a bit years, I'm up £20,000. Right now, if I sell everything that I have, I will make £20,880 profit. Plus, I already made £13,336. So £13,336 is basically over £5,600 in dividends, and then 7,700 plus in capital appreciation. So even if you subtract what I lost, I still made 7,000 in terms of capital gains. All of that's tax free. That's why I use ISA account. So if you start with that first. Okay. So that kind of summarizes the reasons why I did what I did and what I'm doing right now. Now let's talk about the 5 to 10 companies that we came here for. So I'm just going to quickly summarize some of these companies very quickly, each one of them. And then of course, I'll start with the bottom part. So I'll start the ones that are not doing well, and then we'll talk about the rest, inshallah. And what I'm going to do, inshallah, is that at the end of the video, I'll show you each individual stock and how much of that stock that I own and how much I'm down. But the first one is Canadian Natural Resources. So the 5, I'm starting from the top 5. So basically, we're going to go from 5 to 1, basically, if you like. So this is number 5. So number 1 is the biggest loser, basically. 5 is the least to lose, basically losing stock right now. This one I'm only down 1.5%. Is one of the new companies that I've actually had in the portfolio. I'm actually looking forward to buying more, inshallah. According to Wall Street, it is still a buy upside of about 25%. So I really like the company. Kind of diversifies my portfolio in terms of the energy side of things. And top of that, it's one of those companies that pays really nice dividend. Okay, so you get about 5% dividend yield right now, which is really good. So some companies you will see, although my portfolio is a dividend growth portfolio, you will see some companies are in there for the dividend reasons, and I'm not going to shy away from that. I need the income, okay, bit of it right now, and in the long run, inshallah, some of the companies that I own will be paying me a lot more dividends than they are, like the Visas and the Mastercards and so on. But this one, look at the 5-year growth rate of 22%, which is absolutely huge. So that is number 5. Number 4 is AstraZeneca, another company that basically I have been buying heavily just about 6-7 months ago, maybe about a year ago. It has come down quite a bit because of situation in China, and then it bounced back, and then it was basically now again back down again. So I'm gonna leave it alone. Okay, I'm down I think 1 point something. Actually, in fact, I swapped these things around. So this one I'm down 1.5. The other one I was down 8.4. So this basically swap these two around. Okay, so this one I'm only down 1 point something percent, but as you can see here, from Wall Street, it is still a buy, and it's about 32% upside from where we are. $88 per share is where they think this should be. 66 is where it's at right now. I really like the business. Is basically UK based company, so I'm going to hold on to it for the next whatever years, and I will be buying more, inshallah. Next one is Rio Tinto is one of those companies that are very cyclical business. Okay, according to Wall Street, is a strong buy right now. We have 5 buys, 1 hold, 1 buy, and then 31% upside from where we are. $88 per share is where they think the price should be. And this one, it was positive not long ago, but right now I'm down at about I think 3.5%, whatever it is. So that's the next one. Another company that I'm down a lot is Reckitt Benckiser. Has been down quite a lot for very, very long time. So year to date is about 10% for the last 12 months. The year to date is 12%, and for the 1 year is about almost 10%. I'm holding on to this one. Again, it's another UK based company. It is there for the dividends. It is there because it's a kind of low growth company. However, it is one of those companies that consumer staples. So it's like a foundational stock for me right now. So in the long run, I'm planning to buy more, inshallah. But right now, my priorities are somewhere else. And the final company is UPS. This is the mad one. This is the crazy one. This is the one I'm down quite a lot. I think over £1,000. I think I'm down 21% plus. But as you can see, we've got basically 13 strong buys, 3 buys, 11 holds, 2 sells, and 1 strong sell. And that $149 per share right now. That's about 15-16% upside from where it is now. This one, I think it will recover eventually. A lot of it is because a lot to do with the unions, basically unionization and all of these things that happened in the last year. I think we'll see what happens after these festival holidays, because they do a lot of these delivery stuff. There are other big players coming into the market like Amazon and so on, which I'm mindful of. So I'm not sure what I'm going to do in terms of buying more, but for now I'm definitely holding on to it. Right, that summarizes the 5 companies that are actually down a lot right now. I've got a couple of more, and I'll share that with you guys, all of it at the end of the video. So that summarizes the companies that are down so far. Now let's talk about the exciting part, the ones that are actually up so much. So I'm going to start with one, which is basically 1 to 5. Okay, so number 5 will be the one that is up the highest, if you like, and 1 is the least, basically. Okay, so that's the range basically that we're working with. And if you have not liked the video, please do it. Okay, because like I've always said to you guys, it takes a lot of time and effort to put these videos together, and it will be nice if we can reach a lot of brothers and sisters out there, inshallah. And the first company that we're going to talk about today, number 5, basically is Home Depot. Home Depot has been absolutely amazing company. I'm up, I think, almost to 50%, closer to 50%. I wish I bought more, and I keep saying this about a lot of the companies that I have in this portfolio, because at the time I don't think it was all basically overvalued. Right now I do feel it's overvalued, despite Wall Street saying it's a buy right now. We've got 21 strong buys, 5 buys, 10, 12 holds, and 2 strong sales. And as you can see, $431 per share. It's about 3% upside from where we are now. I promise you, this is probably one of the best companies out there. Very stable. You know what to expect. You get your 5% to 10% every single year in terms of revenue growth, in terms of EPS growth and stuff like that. Dividend is very strong. You get that 2%. You got $9 per share for right now. 6% payout ratio, which is quite low, which is quite high. I mean, hopefully that will come down in the next few years. The 5-year growth rate basically is a 10% and so on, and then the basically 15 years of increasing that dividend. So it is a really solid business for me. As you can see here, valuation and growth basically are the two worrying part. Profitability, momentum, and revision. Basically, revisions is actually absolutely fine. So overall, I really like the company. I'm going to hold on to this. I'm not selling any shares. If it comes back down to earth, then I'll probably buy more of the stock, inshallah. The next company that we're going to talk about today is Visa. I'm up about 40. This is basically money, by the way, wise. Although it says 46% up, in terms of money wise, I'm up basically, and I'll share with you guys in a second. You will see it anyway. So Visa is a great company. It's definitely Sharia compliant, because I get that question every single time I post a video about MasterCard or Visa. I get those questions. Visa card and MasterCard basically are both, Visa and MasterCard, both of them are technology company. In order for you and the company that you buy a product from to transact, there must be some sort of a technology. These cards have that technology, and the company facilitates and makes sure that you pay the person you meant to pay, and that person gets the money. The technology, I'm simplifying this, okay? The technology that's used is what these companies have. The cards have nothing to do with the fact that you went to the bank and got riba, none of that. You went to the bank and you bought a more house on a mortgage. There's nothing to do with the company. The company is saying, okay, how much do you want to send? Yep, that this person has the basically right transaction, making sure that the transaction is secure, make sure it goes to the right account. All of the security side of things, all of that transaction facilitating for it, that happens. And then what do? They get their basically cost of whatever using those products. So whoever the company that created, the bank that created that account, will basically then have to pay Visa some sort of a royalty for using their basically business, and that's how they make their money. Okay, simplifying, but it is definitely Sharia compliant. It has nothing wrong with it. You can check on Zoya, you can check on there's loads of places where you can check. Okay, right. So right now, as you can see, the company is actually up 21% year to date, and for the 1 year is up about 20%. And according to Wall Street, it is actually right now a buy, and it's about 3% upside from where we are, $325 per share. Expectations, the earnings is double digits in terms of revenue, double digits in terms of revenue and EPS both. So really great company. I'm definitely not selling this. I will be holding on to it. The next one is SPGI. This is S&P Global, probably one of the best companies out there. This company and Moody's have a kind of doubly kind of situation going on. They monopolize that side of markets when it comes to credit ratings and all of these things. And as you can see here, Wall Street is actually saying it's a buy right now, and about 14% upside from where we are, $579 per share. In terms of earnings expectations moving forward, you can see double digits EPS, almost double digits in terms of revenue side of things. So nothing to worry about. Again, another great company. I really like the business. I'm definitely not selling this one anytime soon. If it comes back down, I'll be adding to it. Next one is a bit of a surprise. Cummins, when I bought this company, I actually did a lot of research to find out a bit more information about the company. And of course, they were kind of diversifying from these oil in basically, diesel engines from, I don't know, from 1900, whatever, to more of a renewable side of things. And they still are really great company. Surprised me a lot, I'll be honest with you. A year to date up to 53%, and a year for the 1 year 53%. For the last 5 years 100%, and the last 10 years we're looking at about 157%. Now in terms of Wall Street, they are saying is a buy right now. It's just about 1% upside from where we are. Earnings expectations moving forward, you can see you've got so 2025 we got about 8%, and then 21%, and then when it comes to that's EPS, when it comes to revenue, it's more or less decent. So it's never been that high flying company, whatever, but it's performed absolutely amazingly. So this is the one that potentially I might actually take some profit off the table, because if these, I'm not sure. I'm going to do a little bit more research, but I might take some profit off the table. I'm not saying I'm going to sell the entire thing, but I might trim. Okay, and the reason is sometimes you don't, by selling the stock and taking your profits, you're not going to lose. Okay, you're not going to lose in the long run. Even if it goes 100% up, I'm not losing anything, to be honest with you. So what I could do potentially is, if I feel it's overvalued, I'll take that money and put it somewhere else, inshallah. But right now, I'm happy with it. I'm going to keep an eye on it for the next maybe year or so and see how it goes. And the final company, you probably knew this was coming, okay, is Broadcom. Broadcom, I am up 382%, which is absolutely ridiculous. As you can see, it's a strong buy from Wall Street. We talked about it recently in last video. You could see it's either buy or strong buy, even after they reported their earnings. They came out the other day. I did the video, and actually at the end of the video, I realized it was up about 12% or whatever it was. I was like, wait, why is it up? Forgetting that it's actually just reported the earnings, and the earnings report I was using is the one that actually they reported the night before. So it was a very weird coincidence there. But overall, basically is right now is downside about 3% or so. Earnings expectations moving forward, I'm thinking once the dust settles, we'll see exactly what these analysts come up with. But you're looking at about 20% plus, 28% next year, 20% next year, following year, 17% in terms of revenue side of it, in terms of EPS, massive growth. So this is the one that I know for sure I will not be touching. I will not be selling. I will not be doing anything else with it. And just please, while we're talking about this one, let's talk about AI. AI is a great thing. Has existed for a very long time, is now being used. Basically, companies now have a use for it and realized how they can actually monetize all of these things. And these things are amazing, but please don't fall for the madness and just buy one of those high speculative companies that are going to be the next best AI, whatever. Don't get into those madness. Buy high quality businesses that are still profitable, like this one here, Broadcom. I'm not saying go away and buy it, but if you had a Broadcom in your portfolio and all of a sudden is basically the people realized how amazing it is, then you're in a good place. But don't chase the hype, please. That's really the dangerous part of this whole investing thing. Because I've always said to you guys, there's no way on earth that I'm basically, if I miss the boat, I missed the boat. So what? So I'm just gonna find something else and just be humble, be simple, and just because remember, you go to work every single day. Okay, you're hitting that 9 to 5 basically every single day, and in the rain, in the cold, and this and that. You worked hard for your money, right? So what are you gonna do? Just drop that into some random stock that one of your friends thinks is gonna go to the moon? Don't do that, please. Be careful, because I've got a lot of friends who got burnt, genuinely burnt. Right, let's now look at the portfolio. Okay, I'm going to show you what I was talking about this whole time. So we're going to start with the bottom part. So UPS is the one that is down a lot. So as you can see, 1,400 plus. RB is the next one, £600 or 11%. Rio Tinto is £233 or 30%. Canadian Natural Resources, this is what I was talking about. I swapped these around earlier. So 8.44% or 200, let's call it £230, £230. And this one, £181 or about 4%. Hershey is the next one that's also down, as well as the Waste Management, which is I'm happy with this one right now because I'm buying a bit more. I think I bought a few more shares. I bought one more shares basically since the last video update. Now let's go to the top. As you can see, Broadcom, I'm up £7,000. That's ridiculous. 382% up, or that's almost £9,000. I've always said I will trim stocks if they go up by 5%. I really don't think I'm going to do that with this one. I'm going to make this one exception. I'm just going to do what Warren Buffett's done with Apple and just leave it alone. Let it grow. Cummins is the next one, as you can see, 74% or 2,000 plus basically pounds up. S&P in global, you can see £1,800 or £40%, sorry. Visa 46% or 1,500. Home Depot is the next one that's doing well. Air Product and Chemicals very close as well, 1,300. Next one is the automatic data processing, basically 1,200. Salesforce is doing really good, considering when I bought it, 52% up right now since then. I wish I bought more. I do own it in both portfolios, and they're doing amazing in those two. Remember MSCI when we were talking about this a few months ago? I think it was this time last year when they were down a lot. Now 21% up, 800+%. I'm not saying I'm genius and know what I'm doing, but at the time I felt like this company was overlooked and it was undervalued at the time, and I bought more of it at the time, and I just kept going. I kept buying more. I think I own 10 shares right now, and there we go. So alhamdulillah. Procter & Gamble has been in the portfolio for quite some time, 21% up. Qualcomm is the next one. Qualcomm kind of let me down in terms of, not let me down, but it hasn't done as much as the rest of the stocks that are out there with the AI side of things. So we will see how it goes. UPS, Union Pacific is another one that's done good for me. Merck is another one. ASML, £625, or basically almost £8,000 basically in terms of my basically how much of shares I think I own and stuff. 8% up right now, which is quite nice. Mastercard is doing okay. Into it, I expect a lot from this company moving forward. They just made a deal with Amazon, so we'll see how that goes. So Amazon will be using the QuickBooks. So all the small businesses that are on basically Amazon will use this company's products moving forward. So yeah, and then there are a couple of other companies that are done all right, and then you've got the ETF. So that's the entire portfolio, as you can see here. You can pause the video, have a look at it. And again, this is my actual money. I'm not hiding anything from you guys. I'm not sugarcoating anything. Just the final thing I want to show you is basically how much I made in terms of basically orders. So if you can see here, okay, £7,746 is what I've made so far in terms of profit realized, and the dividends for £5,620 from that. If you add the two together, you get £13,336 that are basically realized gains already, and which are then reinvested into the portfolio. So that's what I'm doing. This portfolio have existed for so long now. I've basically April of this year, basically next year it will be 5 years, which is good, alhamdulillah. And I'm going to continue doing that. One thing I'm going to do inshallah is to try and max my ISA account. £14,600 remaining, and I've only put £5,000 this year, only because I've got other projects I'm basically working on right now. So I will continue doing what I need to do inshallah to try and max it. Even if I don't max it the entire thing, I'll be close to it. I think I think I can deposit another probably £5,000 to £10,000, if not more, inshallah. And I will let you guys know what I buy, what I sell. I will let you guys know. Whatever I do, inshallah, I will share it here on the Patreon account first, and then of course I'll share with the YouTube community afterwards. If you can join us the Patreon account, that will be absolutely massive help. I didn't want to make this video that long, but I think it needed to be, because there was a lot of things that was on my mind I needed to talk about today. You've seen everything. You've heard everything I have to say. Again, I'm trying to build this portfolio for the long run. I'm not just going to basically buy anything speculative. This is my actual money. This is my ISA account. But I'm trying to max it every single year. Buying high quality businesses. I will make mistakes. I will learn from my mistakes, and I will continue to dollar cost average every single month. If you're enjoying this type of content, tell your friends, tell your family, and join us on the Patreon account. Basically, join us on this journey, inshallah, and just be humble. Just do what you need to do. A lot of this money comes from, well, not basically all of this money comes from my salary. I try to save as much as I can. I'm going to talk about savings and things like that. I've been asked a lot of questions, so I will talk about how to save, what you do, and what I normally tend to do. But a lot of this money comes from exactly from my salary, genuinely. That's why basically I'm trying to right now hold on, basically not putting too much money into this. The family portfolio, I haven't actually added any money to it for a while, but it's actually growing, which is nice, alhamdulillah. Again, another thing that you can get access to if you join us in the family, if you join us in the Patreon account. Okay, let me stop the video here. Have a wonderful day, inshallah. And as always, I just want to say thank you for being here, and thank you for listening. If you're still here, by the way, put on the comment section, what do you own? What are you what are you planning to buy? What is the things that you're looking forward to in 2025, inshallah, in terms of stocks, investment? What are you doing investment side of things? Share your journey with us, inshallah. Inspire the brothers and sisters out there. Have a wonderful day. Assalamu Alaikum.